Hi, this is Richard Bright, and I am delighted to be here with Chris Cordon, our benefits advisor at Affinity Benefits. And as you all
Mhm.
know, Affinity Benefits handles our national healthcare program. Chris, welcome and thank you for being here.
Thank you so much, Richard. Good to see you.
So let's give folks a little bit of a background on you, Chris. Tell us how you get started.
Oh my, 16 years ago, 17 now, 2009. I started I'd never sold insurance, but I like insurance. I didn't even have insurance then. But I got really passionate about a certain product in the market um, because of something my mother went through in 2003. We lost her to ALS in 2014, which relates to another product that we have access to, but it was with small businesses and mid-market businesses. And the more and more I talked to owners of small businesses, the more and more pain I heard. And so, like, year after year after year, the healthcare system gets worse,
Yeah.
and the owners got more and more angry at the system. And so I kind of got a fire lit to to talk about what people can do about it. And through a few different iterations over 16 years, now I find myself in the association space, and I find myself here with you, helping small members, the smallest of members.
That's great to know that you've got a personal connection here.
Yeah.
Obviously, sorry about your loss there, but
All right.
it certainly made you take a deeper dive into this and the
Yeah.
challenges, right? And as you said, we've still got them. So 16 years ago you started. So what's changed for small to mid-sized businesses in respect
Mm,
to accessing health coverage?
yeah. Okay. So first of all, it's the number two line item expense for a lot of companies. And if the super tiny ones offer benefits, it most certainly is their number two behind labor. It's gotten worse in a couple different ways. So you've got the Affordable Care Act, which, if you're a small company and you're giving your employees access to group coverage, that's one thing. But if you're letting them kind of go get their stuff on their own, then they're going to the ACA, to the exchanges. And there's something inside the Affordable Care Act called the medical loss ratio. Do you know what that is?
I don't.
It says that health insurance companies cannot profit more than 15% off of health. They have to pay 15 cents of every dollar towards claims. So that sounds good, doesn't it?
It
Right?
certainly does. It sounds
Cap
great.
cap
Yeah.
their profits. All right. Well, let me ask you a question. Would you rather have 15% of $100 or 15% of $1,000?
I think you know the answer to that one.
Right. Okay. So now relate that to premium. So the more premiums they take in, the bigger their profit is. That's one area. But also vertical integration. You know, I don't want to single out United, but they're my least favorite of the bukas. But United owns physicians, they own pharmacy benefit managers, they own all parts of the health plan. And so they've consolidated, and now 83% of all the pharmacies that people use are owned by three companies. And when you're getting to a duopoly or, something akin to that, less competition.
Right.
Yeah.
Yep. Great. Yeah, no, fully understand that. So what does what's the health insurance landscape look like now for us and our member companies, right? Small to mid-size primarily.
Well, now you're talking about choice. Okay. I even brought this up because, or I even saved this, like, 'cause I have notes on this because I couldn't believe it when I saw it. So I want to be correct. There are states that have a single option in their market.
Right.
Okay. Most of them. So I'm in Illinois. In Illinois, for companies under 50 at least, and most companies that are mid-size as well, you have two options in Illinois. It's Blue Cross and United. That's it. If there's if you don't like the cost, you got to go out and find some other mechanism to try to save money, whether it's level funded solutions or otherwise. But for example, Alabama it's only Blue Cross. Blue Cross has a monopoly in Alabama. It's 98% of hospitals. Texas has 2, North Carolina has 2, Tennessee has 2, Colorado, where we've saved a couple members of one association hundreds of thousands of dollars on an annual basis.
Right.
They have 2, but most states, health insurance companies are fleeing the market. So because they're losing a lot of money, and so
Sure.
that's kind of the number one thing that
Yeah,
I see
great.
small businesses struggling with.
Yeah, it is a struggle, that's for sure. So,
Mm-hmm.
so I know this could be a fairly lengthy answer. So, try and keep on point with me here, because I know we've got a lot of other juicy stuff to get into here.
Got
But
it.
why is it? Why does small to mid-sized business they struggle to get good rates compared to larger employers, right? And what I'm hearing from our members across the board is that premiums are going up 15, 20% a year. So what's double double sort of question here, but what's driving all of that?
Okay, I answered some of it in the last answer, so this won't be a very long answer, but it's everything that I've said in terms of vertical integration, and then the health insurance companies wanting to make 15% of a bigger number every year. But here's the reality of the individual market and the group market. Okay, the individual market, we just saw the worst rate increase in 15 years last year.
Yep.
The individual market, it was 18% nationwide.
Yep.
The group market, it was an average of 10%. Okay. And I'm not going to do the math here with you, but like if you just do compounding year over year, like even if it's 8%, 9%, do that math over 5 years and see where you're at in 5 years. And sticker shock is the nice way to say it. But the drivers of this, I mean, we can talk medications, we can talk GLP-1s, we can talk 38% of all costs of health insurance is pharmacy, right? So we can go back to the 3 companies owning the pharmacies. There's a number of things that are driving this, and the small to mid-sized business is the one that really gets it in the teeth.
Yeah. Agreed.
Yeah.
And I've seen that myself. Obviously, you and I have talked about my my health insurance, and thank you for all your help with that. So, what are the biggest mistakes you see that business owners are making in general when shopping for health insurance coverage?
Picking the cheapest coverage, which is usually the worst coverage for their people, just because of dollar amounts.
Great, thank you.
Mm-hmm.
So, again, a two-pronged question here, but interconnected too. So, what's the difference between what our members can get on their own versus what they can get through group access like we're providing, right? And at the same time, can you walk us through, what our health program is, right? What is it? How does it work? How easy, to access all of that good stuff?
Yeah, the difference between being part of a large collective group and being by yourself, I mean, that's evident in a lot of aspects of society, but it's never more true than when you spread the risk. Okay, so that's insurance right there. That's insurance. It's all about risk.
Sure.
Okay, so when you're by yourself, you're dealing with limited risk, and when you're part of an association, you're in it together. Okay, you're in it with a large number of people. And so what this plan, the association's plan, what that allows for is the spreading of risk in case there is something detrimental that happens to one person or 2 people. That risk is then spread out.
Sure.
So what this plan, a pooled risk plan, which is what this is, allows stability. That's the big thing. Okay, so I've talked about the increases on the individual market. I've talked about the increases in the group coverage for small to mid-sized businesses being what they are. The pooled risk plan that your associations have, the average increase is 5%. So if you look at those arrows beside each other, you take 18 to 20%, chop it in half to 10. These are the real numbers. Chop it in half to 10. chop that in half, and that's what you get with the association's health plan. Now, there's no health. We've had some of your members where their health insurance has stayed stagnant, a couple that went down, right? Most people's health insurance, no matter what situation you're in, it's going to incrementally go up because inflation is right along with it. So you take the least bad thing you can get, and that's kind of that's the difference between being by yourself and being with a large group of people, is you got more stability, more predictability.
Sure. And a lot of what we wanted to do, Chris, when we approached you about this program nationally was, we heard of the pain, right? And I've seen it firsthand myself. So, is there a solution out there? And it's certainly, we know there is, and it's been working. So, so let's talk about that. What does it actually cost a member to explore this, right? What does even the commitment look like, if there is a commitment?
Yeah, there's two different things there. I'll take the second part first. The cost ranges. Okay, so the plan is underwritten based on the demographics of your group, okay, age, health. The process I'll go through in a second, it's simpler than most people think. But in terms of the cost of the plan, there are 12 different rate tiers based on that underwriting, based on your situation. With the plan options through the association's health plan, you have 8 different plan options. So if you do that math, the rates range all over the place. I've seen them as low as the high like the high 300s, 390s, low 400s. That's like for the super high deductible plan. But I mean, your general range is going to be probably from about 475, 500 up to about 750 for an individual. But also the rate plans, you've got $1,000 deductible, so low out of pocket, all the way up to a very high deductible and everything in between.
Right.
Now, so, hold on. There was a second part. The process, which I don't know what your next question is. There's no commitment to getting to the process of getting a quote. Right. That's a simple digital process where a business owner goes in, puts a few pieces of information, they get an email to log into their custom portal where they fill out a company questionnaire, and then they put their employees' emails in, and their employees are digitally, safely, securely sent health questionnaires. They fill it out. Once everything's in, that's where the magic happens. That's where we go to work.
Good. Yeah. Thank you. Okay. Yeah, absolutely. And no cost to do it, right? No commitment, no cost. None. Yeah. And if you're in the healthcare market anyway, you got to find another solution. So
if you go, if you go to my LinkedIn and just scroll, you'll see me demonstrating how to go through that process. It took me 6 minutes.
Right. Yeah.
I condensed the part in the portal. That goes fast. So the video's less than 4 minutes, but the total process end to end is 6 minutes.
Yeah. And unfortunately, it has to be done, right? There's underwriting, et cetera here. So,
yeah.
So talking about that, and I'm going to tie something else in here, but what kind of networks are we talking about within our program, right? And, the old saying, can we keep our own network? Can we keep our own doctors? What does that look like?
Yeah, I'll be honest with you. I don't know. There are 2 national networks. One of them is the best PPO that I've ever seen. In Chicago, where I live, it's a 93% contractual rate with Blue Cross Blue Shield of Illinois. And so I thought it's a Cigna PPO. And I thought, well, I'm not going to be able to find a doctor because everybody's Blue Cross here. There's not a provider in Chicago, third biggest city in the country, that wasn't contracted with Cigna. So we have this massive, expansive national network. Then there's another network that relies on a pricing mechanism called reference-based pricing with a primary and ancillary physician kind of backup network. I can certainly explain this if somebody wants to call me and ask me about it. I could talk about it for an hour. Those are the 2 plan options that people have access to. But to the question of can you keep your doctor, most times, yes. But what I said I don't know is because I never know what people are going through in their own household. I don't know what specialty is required for their spouse or their kids. The good news is that there is a simple digital means to look up if it is. And that's another thing that if I get contacted, I'll send provider lookup links with instructions on how you can list a number of doctors to see where they fall in the networks that are available.
You know, that's one thing. Kudos to you, Chris, that I know many folks have contacted you again, free, no commitment,
Yeah.
put it in the system. You've handheld them, you know, consulted, and at the end of the day, they said, hey, you know, we're not going to move, right? And in other
Right.
cases, they have moved, and it's been very successful. So
Yeah.
I appreciate you being able to do that. But I know, obviously, I know we've got members that are loving the offering and have saved a considerable amount of money. And I know one of them, again, I think it was out in Colorado, has kept the same network too, I believe. So,
Yeah.
so the other thing I wanted to stress that it is a national program, right? So we, you know, in it, we have availability in nearly every state, right? There are some states that may be an exception and maybe not, but just
Right.
ask, just go on the system, talk to you, and go through it. But I would encourage everybody to at least take a look at it, look at it in comparison. So for the members that are listening to that want to get a quote, right?
Yeah.
It's coming up for renewal or even midterm because they can do it whenever, right? To take a look at what our options are. What's the next step?
The next step, and that's a big deal that you just said. This is an ongoing enrollment, and if small businesses if they think they're locked in to what they have now, they're not. To just go ahead and get the process started, go to the national website. On both, there is a dedicated page. You will see my face again. I apologize for that in advance, but I will be on there right above or next to a portal where you can go in, put some company information, legal name, email, name, and then a custom homepage link is sent to you, and that's where the process starts. End to end, like I said, it's only about 6 minutes.
Great. Thank you. Well, this has been extremely worth doing here. I've learned a lot. You're certainly
Good.
I mean, this is complicated. It's costly and it's complicated, and yet it's so important, right? It's critical to get it right. So I appreciate having somebody like you that is our benefits advisor,
You got it.
and appreciate all you do. So we'll keep promoting this. Everybody at the end of here, you'll have access to the web address, where to go to, how to contact you. But again, Chris, very, very appreciative, and thank you for spending the time here to educate me and the members here on this podcast. Thank you.
Talking to you is always the best part of my day. Bye-bye.
Thank you.